Hi, this is Arnav. Welcome to the channel. Today we are going to talk about the Balance project. Balance is building a blockchain-based accounting platform, and today we have Brett with us. Brett is the strategic director at Balance, and he works at Consensys. So, hi Brett, how are you?
Doing well. Thank you for having me.
Okay. So, can you give a brief background of how did you get into the blockchain space and how did you eventually started working at Balance?
Yeah, definitely. I was actually studying accounting, in New York. And a few years ago, or a little over a couple of years ago, I got pretty lucky and I met some consensus people. I was going to like meetups and learning about Ethereum, met some consensus people. Actually, someone on the balance team, so Griffin on the balance team, as well as a bunch of other interns that were here at the time. Essentially, they told me about Ethereum, and I was immediately hooked. I started reading online, looking at the implications of the accounting industry, and they were very massive. I had been working a little bit in accounting, seeing kind of what the roles were, and my understanding of where the industry was going was, much more exciting, and much more automated, and a lot of improvements to the accounting space. So I started kind of writing about use cases in the audit industry, in the tax industry, some about tax treatment. And this was, in 2016, kind of early on in 2016. Then I got my master's in tax, and still, getting more and more involved in the blockchain space. Started like having my own meetups, had my own events. Started the community at Fordham, which is where I went to school, around blockchain and fintech. And then by the time I finished my master's, instead of kind of going into the public accounting realm, I went into Consensys and started at Consensys. So I've been here for about a year now. And yeah, it's this, the speed of learning and the quality of people and the contact, with really, really intelligent, forward-thinking initiative takers has just been amazing since I've been here.
hmm And how did you actually get started with Balance? How did you get the idea?
Yeah, so I started immediately on the balance team. Like right when I started, I was full-time balance, um, and it's just the perfect kind of combination where I was spending probably more time learning about blockchain, learning about Ethereum, learning about all the different projects, reading a lot of white papers, than I even was, focusing on tax. But I had the accounting knowledge, or enough to really help the project. And so spending a lot of time at like getting to know a lot of the people in the space. So kind of getting hands on. Actually, I guess I didn't mention it, but I was actually doing my own project while I was in school as well, my own startup. That was like blockchain focused project. So I definitely picked up not like the right amount of knowledge to kind of get going. And by the time I started on Balance, it was the perfect position to be able to dictate and you know help push a lot of the features forward in the application, a lot of the accounting focused features, right? It's an accounting application. Work with engineers, also do some business development with the sort of the community. So it was definitely a good place to start at.
hmm So, for the audience, can you give a brief of what exactly is Balance and what problem does it solve?
Yeah. So on the balance team here, I mean, we've been doing this for a couple of years, really thinking about how can you sort of re-engineer the accounting industry with blockchain tools. So we're really building financial reporting tools, and business processes for the blockchain space. Think about all of the current blockchain companies that are, in the blockchain space. So you're talking about token sales, crypto funds, exchanges, miners, high net worth individuals, investor sort of holders. So there's a lot of them out there, and they're all holding digital assets, and they're kind of acquiring them different ways. So miners are earning it as income. Some are purchasing it off exchanges. Some exchanges are, facilitating trades. Token sales are raising these funds in the form of cryptocurrencies, or crypto or digital assets. and there's really not a great accounting system out there for these different types of like real companies that need to operate and track their financials, track their create books and records. And yeah, so that's the need, is to be able to operate your business. And then a step further is a lot of these companies are needing to leave cryptocurrencies, needing to leave like staying in digital assets, for a couple of different reasons. But one of the main reasons being that they can't actually operate in it, right? Yeah, in order to pay an employee, depending on the country you're in, or in order to pay like lawyers or accountants or taxes, like you have to leave digital assets. You have to go to USDC. You have to go to exchange. So we're also building out those tools to allow these companies to operate in those digital assets, so like to actually do invoicing, expensing, payroll, these kinds of things. So it's all the way from starting to become accountable to yourself, get on top of your business, understand your financials, and then operate as well. And then sort of like next thing you can really do once you're accountable to yourself is you can become accountable to the industry, to the space, to your holders, to the actors of the ecosystem. And you can there's this form of transparency, of optional transparency that we'll release. Yeah.
Okay. So in Balance, I was watching one of your videos and you explained what is triple entry accounting. First, you talked about what is double entry accounting, and then you explained what is triple entry accounting. So can you give a brief about that as well?
Yeah, definitely. So triple entry accounting is very important to the Balance team. It's essentially, it is the essentially, like if you look at Ethereum, you look at Bitcoin, these are, at the core, really like these ledgers, essentially triple entry accounting systems, right? If you think about the way a transaction currently works, you have two, the way transactions are currently being kind of perceived in the financial industry, like the traditional financial industry. You have like an exchange, right? And there's a buyer and there's a seller in a lot of cases. The way that books are currently being recorded is from each of their point of views. So you have like what you call the trading partner view. So you have the buyer and the seller. They each record it in their own way. They have their own view of that transaction. And there might be some discrepancies. There might be an error in one book, and hopefully the other one set of books doesn't have to depend on the other set of books. And there's all sorts of incentives to try to make your books look the way you want it for either tax purposes or for the bottom line for profits, right? Then you kind of take a step further. That's from double entry accounting to triple entry accounting, where now you have blockchains, where you have now instead of where you were making a transaction and then later recording it, now you're making a transaction and it's being recorded at the same time. Okay, so you have like this value equals the record. I send an ether, as it's sent, it's recorded on the ledger. Okay, and then that's really important. Is like the value equals the record. And the other really important thing about the triple entry accounting is that there's now this third entry, this immutable, trustless record that is independent view. So it's like the independent view that says this is the exchange, right? It's the transaction that is the exchange, and it shows the exchange for the right amount with the details of the transaction. Okay, and that's permanent, and that's impartial. From there, then you have the two sort of the double entry of the trading partner views, like having their own perception of that transaction. But the transaction is there, so they can interpret it. But at least there's that independent view, that transaction between the two parties, and that's what you call the triple entry.
And like what happens is like we have both the buyer and seller, or like two people who are transacting, they maintain some link to the smart contract in the blockchain, and both of them maintain like each one link, and there is one info data stored on the blockchain. Is that it? How that works out?
Yeah, essentially. Yeah, exactly.
So can you talk about like how do you actually transform the transaction data into traditional accounting formats? So I'm a developer and I was going through the project and I became curious how exactly you're doing it technically.
Yeah. So essentially, I mean, yeah, it's basically reading the blockchains, right? The different chains. So on the balance team, we're sort of agnostic to tracking assets. So, there's a lot of different projects, a lot of different blockchain companies, and in order for us to be able to support them, we need to be able to support a lot of different assets, right? Different blockchains, right? So essentially, from a high level, you basically sort of spin up a node. So you have to actually run the data infrastructure that monitors these different blockchains. So like maybe a Bitcoin node, an Ethereum node, et cetera, right? And then because you can't actually query a blockchain with correct speed or for certain parameters, then you actually have to put it in a more queryable environment. So actually store it more centralized. And then from there, once we basically store a lot of the information in a centralized way, you can set up the API and then connect it into our sort of into this client server application, server side application. So yeah, essentially, that's pretty much how it works. And there's not too many doing it in the space because it's pretty complex, and it's a pretty big feat, especially for us. We do it for a lot of chains, a lot of different blockchains, to support kind of the blockchain company consumer base.
Can you give an example, like for one company or organization, that how, like say you are tracking Ethereum assets or all the different assets for a company? How do you do that?
Yeah, so let's say a company has token sale. They raised half and half Bitcoin Ether, and so in our application, all they really need to do is plug in your public Bitcoin address, plug in your public Ethereum address, like your public key, right? The address. So once you plug in the addresses and you add it, like what's going on the back end, which is like totally different piece of infrastructure, is we're going in and reading our infrastructure. So we would go in and read our nodes that we sync and store, and then we read all that and we pull it into the application that you see. So immediately we populate like all the transfers, all the movements, all the different transfers across Bitcoin. And Ethereum in and out of those addresses, the balances of those addresses. And then from there in the application, you can start, classifying them. You can start turning all those transactions into, like sort of financial reporting, formats. So like a balance sheet, income statement, gains and losses, that kind of stuff. Another huge piece of infrastructure we do is also the pricing. So we pull in like all the different historical prices and we go back like a few years, and that is important for gains and losses, getting historical prices at the time of the transfers.
Okay, so like say I did a token sale, I will contact the balance team that you do the accounting for me, and I'll give you my addresses of various addresses in which I'm doing the crowdsourcing campaign, and you will convert all the transactions and whatever is happening into some like normal accounting based format. Is that
right?
how?
Essentially, yeah, exactly. Essentially, reconciling, like that's the term, the magic term in the accounting world is you can reconcile. It reconciles all your transactions. So it's not too different from kind of normal like sort of double entry bookkeeping software. We're built on triple entry information, triple entry data, right? So it's how this application is essentially the trading partner view of the triple entry transactions. So they can, like just like you said, all the transactions populate. The user can go in and turn those transactions into journal entries. Reconcile all those transactions into financial statements, like balance sheet, income statement, and then from there, there's a whole bunch of features within the app, like labeling contacts and vendors you deal with, and kind of changing the types of accounts you use. So sort of like the chart of accounts, which is like an accounting term for the accounts that go onto the general ledger. So you can sort of modify all of those, and everything's exportable. So we built it to like be able to export into third-party accounting systems, like maybe your QuickBooks or Xero, Sage Intacct. So yeah, I mean, essentially, token sales are really great. Is a really great use case, and we have clients that are token sales on the application.
Hmm. So we have now started about talking about clients. So can you talk about some, like, who are your targeted customers, and what's your business model?
Yeah, sure. So our target customers, prime target. So essentially, you can think of it as it's a crypto accounting solution, right? At the end of the day, so it's accounting tools for the blockchain space. So it supports any company that is holding digital assets, right? So if you can kind of think of it as like a sub ledger to all the transactions. So a lot of times these companies, just a matter of fact, at least in the short term, at least now, they have fiat transactions, right? They're in USD, euros, Australian dollar, Singapore dollar, whatever it is. So this is kind of like a sub ledger in some cases, where basically any company, whether it's an exchange that's holding digital assets, whether it's a token sale that's raised digital assets, a crypto fund that's holding digital assets. I mean, these are really those are really our that's our audience. That's who can use the platform. Who we've been kind of targeting as far as users and kind of going for like acquisition, I guess, is so there's the token sales more specifically. Yeah, so token sales and also some crypto funds as well. So yeah,
And what's your business model?
as far as business model, yeah. So business model is software as a service. We have an application that we sell for a
It's a
monthly fee.
subscription based software.
Yeah, SaaS. Yeah, it's SaaS.
Okay, okay, got it.
Yeah. But I mean, so that's how it's kind of. I mean, if we take a step back and think about, well, why is it that we're building this sort of server side application? Well, the thing is that there really isn't a tool, or when we started thinking, oh, we want to build these sort of reporting tools or accounting applications on the blockchain, we realized that there's really not a tool out there to just track these assets. There was no general ledger for digital assets, and we feel like that the general ledger is really the backbone to the accounting industry, and for reporting. So the first thing we really did, and there's kind of there's a couple approaches, but our approach is really build out the general ledger, build up the financial reporting tool, and then build out the protocols, build out the basically the business processes. So that's kind of our approach, and we think it'll pay off in the long term to kind of go that way.
And so, like, do you so you would need to think, and what is the jurisdiction? Like, if say you have a customer based out of US and you have a customer based out of Singapore, so do you think about that, how the tool changes because of that?
Yeah, and this is a very international industry. I mean, there's more and more token sales happening in different regions and other regions other than the U.S. Right? And we're an international company, so we understand that we go around to all the different countries. Singapore, Gibraltar. We work with companies in France and Germany, Switzerland. In the U.S. and San Francisco. So we have a good understanding that it gets very international. The space is very international and it's very global. So yeah, we've definitely taken that into consideration. Essentially, like most of the world operates off a similar accounting reporting standard. It's called International Financial Reporting Standards, so IFRS. And that's pretty much everywhere other than the U.S. The U.S. has their own standards like GAAP, but for the most part, most of the world accepts and abides by IFRS, including some leeway to do the same in the U.S. So the actual application itself has a really open framework to be able to have a modular chart of accounts, gains and losses to be able to kind of support your region and where you're based, depending on your country or internationally.
Mm-hmm. And like, you have plans to support normal users as well, like say people who do normal trading and they have to, or say some traders who trade in high volumes, they want to do their accounting and file taxes and all that stuff.
Yeah, so I mean, it's kind of we have the infrastructure, like we have like the tax system calculations, we're sitting on the data. I mean, like we will support that. Yeah, it's just kind of I guess from a business perspective, it's just a matter of focus. So kind of focusing on certain markets. But yeah, we will support crypto funds and high volume trading.
Okay. So, can you talk about some partnerships that you have done, and what's the like future roadmap you have for Balance?
Yeah, I mean, so as far as we're going to put some logos up on our website soon about our customers. But as of now, we've been in production, like live. We were in beta for about. What I can say is we're in alpha. We did our alpha with Aragon, Gnosis, and Digix DAO. We had a beta with 30 plus token companies, and we put a post out about kind of our learnings from the beta. And then now we're actually live. So we've been in production for probably about a little over a month. And we're not able to kind of talk about who our current customers are now. A bit of like, needing to get forced permission and then potentially security. But we will put it out there kind of, in the process of getting approval, to say those names. And yeah, what I can say though is that, from, working with these different projects, kind of, we have about a little over $1 billion of assets accounted for in the Balance platform so far. So, out of the 9 billion or so raised, we got some prominent, some big projects that trust in the software and are onboarded and using it since we've been live.
Mm-hmm. And like, do you have plans to target like the traditional accounting space as well? You are very crypto focused, like targeting the crypto accounting game, like getting, say, the traditional players on blockchain or making their accounting more transparent.
Yeah, so I mean, kind of the way we look at it, the way we look at the Balance team, is that we're really going for the blockchain space, and the reason that is because we see it as more and more assets are becoming tokenized. Right? There's utility tokens. There's security tokens that are proliferating. There's the non-fungible, the crypto kitties, the ERC 721, the ERC 223, the ERC 8. It goes on and on. There's so many different new token standards coming out. I just saw Bounty token started to come out. So with all these different kind of smart contracts, token standards, and new assets that are proliferating, we see this we believe this is going to continue, and that there'll be essentially like a pendulum swing towards companies having a competitive advantage and actually having an advantage to run and operate in digital assets, and moving more towards this. Individuals, crypto funds, companies like that are having token sales, even traditional companies like real estate companies that are tokenizing their real estate. So we're really going for this re-engineering the financial processes, building out for the companies that are running and operating in tokens. Of course, in the short term, like in the now, there's no doubt about it. There's a lot of fiat going on, even in the blockchain space, right? Like decentralized exchanges. There's even token sales have to go to fiat for different reasons. So we are, on our roadmap, it is to incorporate and allow for those, for the short term, being able to go into fiat, being able to support that. So yeah, we will, but essentially our focus is the long-term bottom up re-engineering sort of the accounting system for the blockchain space.
Okay. And I'm just curious, like what were the ICO teams doing, like who are not using Balance or who are doing their own token sale? What are they doing right now for accounting?
Yeah, that's a great question. There's a lot of ways. There's a lot of different topics, sort of in the best practices or the processes of token sales around funds. There's sort of the wallet structuring. There's professionals, whether they're on their team or who they're hiring. There's inventory methods, how they're doing gains losses, the region they're in. right? Use of funds, how they're classifying those, like what are they calling it? What is the proper like technical accounting treatment around funds that you're raising? So, and it can make a huge difference for like tax liability. There's sort of just like the process flow from beginning to end, and like what you should do, from before you raise to get ready to after a year, 2 years down the line. So there's definitely a lot of topics to go into. Like currently, what we see is a very manual process, like extremely manual and usually pretty delayed. Unfortunately, I think when you look at the sort of token sale space, there's a lot of excitement around the technology, which is amazing. We're innovating as well. We believe in like this. It's what you want to see. There's a lot of money pouring into this space, which is also great. And it's not always your first thought to take care of the accounting and the back end processes, and some of these kind of logistical needs. So, that's kind of unfortunate. So a lot of times we see projects that, either don't have any books or records, even if they've already had the sale. Sometimes they have someone working with them, and maybe it's not like a full commitment to accounting. It's more of like an operations person that's in charge of finance, and hopefully that they're, engaging with someone externally. And then, in the rare case, it's like they actually have an accountant or a specific person dedicated towards being on top of their books and records. There's also a range of sort of the wallets structuring they have. So some just are kind of all in one wallet. They're spending out of a wallet, they're holding it in a wallet. Or sometimes I see good practices as well, which is what we'd recommend, and what we've seen a lot of the accounting firms we work closely with to collaborate is some best practices around like having the token sale contract, having a cold storage, having different hot wallets for different types of expenses, or basically being able to creating wallets for proper like custody. So you basically, maybe you create a wallet for a big purchase, so that it makes a big effect on taxes down the line, like how you're going to realize taxes. There's different inventory methods depending on how you split up your wallets, right? There's also, before it comes to the token sale, you want to think about like tax advisory, right? You want to make sure that you're structuring your entity correctly. A lot of these are international. Like for the early stage companies, they can get pretty complicated, right? You might have multiple entities, a nonprofit in a different country. So you definitely want to think about tax advisory, how you're structuring your company, working close with your lawyers and your accountants on that. And then after the fact, you're going to have a bunch of transactions from the token sale. You have a bunch of operating transactions, whether you're going to exchanges to go to fiat, or if you're going to other assets or paying employees or paying. A lot of accountants, lawyers actually accept these digital assets now. So there's going to be a bunch of records that are sitting in Excel. Like essentially, it's super manual. Like go to a block explorer, download your transactions, throw it in an Excel sheet, make tens and tens of columns to track your historical costs. Go fetch your historical prices, buy asset at a certain time. Maybe you just choose the end of the day because it's too much work to get it at the second. Very unstandardized, really high touch prices. So like Bitcoin, Ether have a really high volume. So it matters what time you choose that, and you have to be standard about that. You have to have a standardized practice around that. So yeah, I mean, you can kind of go on and on through the end, but essentially, it's extremely manual, and they have to do a lot of reconciliation, mostly in Excel. And then, hopefully they engage with accountants and lawyers.
Mm-hmm. Okay.
So I guess, sorry to add on, where balance really comes into play there is, it gets rid of the spreadsheets, right? It gets rid of all that. So it makes it much easier. You just throw in your addresses, and from then on, you're able to, see all your transfers, create the financial reports, and then from there, the accountant's job is very high level. It's very, help you think through an issue or two, or maybe a classification, and it becomes a lot less work and a lot less hours for the accountants.
Mm-hmm. And so like, token sales are like, they have this distribution of tokens, like 40% for the sale 35 say for the team and the remaining for operations. Do you and we don't know like how they are spending that actually, how the money they have raised, how they are spending that. So is that going to be an incentive as well for say the people who are doing the ICO to come on the balance platform and say that this is we are coming here, you can see all our books here and how our transactions and uh, will go out.
Yeah, absolutely. So I like the way I like to say it is, first, the most important thing is for the companies to become accountable to themselves. And then in turn, they can become accountable to the token holders or people that act as the ecosystem, and then even be transparent, right? So, first things first is a lot of these companies don't even know what's going on with like which tokens are in which wallet and what transactions I've made, and even if it's an Excel, is it correctly inputted? It's very manual, there's a lot of errors. So first things first is like, get 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 it situated, get all your stuff in one place, understand your balances, like have some pretty analytical views about your portfolio. Have a clear record of all your transactions, start getting financial reports, understand how your business is operating, right? And then once you've kind of get to that point where you're comfortable with, your financial statements and like what you've prepared by working on the software, the end, the end result is a reconciled financial statement, right? And a lot of information about their current token holdings and the prices of that. So what we're going to do is we're going to roll out like a portal. You kind of think of it like a coin market cap, how it has like prices, except for this is like, financial statements and your holdings. And it's optional, right? So, I mean, we make it optional, of course, because it's, the most, like I said, the process is accountable to yourself, and then become accountable and transparent to the ecosystem. So what we do find is that a lot of companies are very for this. They do want to be transparent. So it's just a matter of, kind of them getting themselves together, getting an account, getting everything reconciled. And once they feel comfortable, I think a lot of them will be transparent. We'll definitely see a trend where it'll be like a standard where, you'll be transparent. I mean, you can kind of think of these, these tokens are traded on secondary markets. There's, a lot of hype and up and down and mispricing. And there's a lot going on that makes it look kind of similar to like sort of public markets. I mean, they essentially are public, right? So I think there's a standard in this space that is much higher than just a regular private company, where they expect to see a lot of updates, a lot of financial information being extremely important part of that. Like not just financial information, of course, there's the dev updates, and a lot of other things, but financial information being a big piece of that. So I predict it'll be a standard in the space to have that transparency for your project.
Yeah, I think that sounds super interesting. And like in the future, we might have a Balance 3 coin market cap in which we can click to various coins and see their accounts. Yeah. So now moving on to the last question, how is it like to be in Consensys and be a Consensys company? And what can say people who are going to do an ICO or who are maybe operating an exchange, how they can get in touch with the team?
Yeah. So I mean, Consensys is great. I've been in Consensys for a year now. But even before I joined, I'd been following the company extremely closely for a year before that. And the people I was meeting were doing what I wanted to be doing. And we're super initiative takers and, very on the forefront or extremely knowledgeable about a certain industry. I think generally the average person in Consensys is a forefront thinker, very initiative taker, and pretty quick, pretty smart. So you can kind of think of it as like all the different industry leaders across accounting, what do you call it, whether it's accounting, energy, different financial services, music, entertainment. I mean, it goes kind of on and on. There's 50 folks that kind of spread across different areas. And you can kind of think of it as these industry experts that saw Consensys as the place to go to be able to chase and push their vision of blockchain into their industry. So it's very industry wide disruption going on. A lot of people that are sort of the leaders of their firms or their practices or their area that really wanted to make a difference and use blockchain and saw it and believed in the vision of Ethereum and believed in the vision of what decentralization means. So a lot of really bright people that are talking about things you want to hear about. If you just kind of sit in the office for a day, it's super interesting and quite frankly a little distracting sometimes. But yeah, it's a great place. And if you want to get in touch with the Balance team, you can reach out to info@balance with a 3 instead of an e.net, info@balance with a 3.net. Yeah, and go on our website, check out our website, balance.net. If you're a token sale, crypto fund, high net worth individual, please reach out. We'll, happy to show you the platform, walk you through it, talk about our offering and our deal, and we'll get you onboarded. It's a very pretty friendly, pretty full service package. So we really get you. Make sure you get from beginning to end on your accounting processes. We know pretty much almost every accountant in the space. So, we can help you find the right accounting firm, even law firm. We'll connect you to the right guys. We'll, guide you through the process. And I think you'll be pretty well situated by completion.
Mm-hmm, mm-hmm. Okay. Thanks, Brett. Thanks a lot for your insights. I personally learned a lot as well. Yeah. Thanks a lot for taking the time out.
Yeah. Thank you so much for having me.